Now that the euphoria around the loosening of lockdown restrictions is behind us, there is a reality setting in that is more painful to financial markets, one which seems to be promising things will take a lot longer to get back towards normal than what had been fantasy expectations for a V-shaped recovery. The return of virus cases has been most unsettling, also fueling fears of second wave, and all of this at a time when the global economy was quite arguably already running off the rails on account of an unprecedented amount of monetary policy accommodation and government stimulus post the global financial markets crisis of 2008. And now, following the latest barrage of stimulus, the global economy will be that much more behind the eight ball, with a heavy price to be paid to dig out. There is also a lot of worry around global trade tension, this as the US and China continue to jab back and forth. Whether or not investors continue to find comfort in gestures of further accommodation and commitments of unlimited QE and possible negative interest rate policy remains to be seen. But in our view, all of this is a big recipe for another big fallout in global markets. Earlier today, the RBNZ extended its hand after leaving rates on hold, but upping its QE and warning of negative interest rate policy ahead. We fully recognize the need for central banks and governments to intervene in an effort to stimulate the economy, but we also wonder at what cost and just how reliable a strategy really is that promises an endless amount of support when surely there are more major credibility issues with such a commitment. We wonder if investors are finally starting to wake up to this reality in 2020, and if in fact we've reached a point at which further gestures of policy accommodation and fiscal stimulus are indeed no longer translating into guaranteed risk-on flow. Looking ahead, key standouts on the calendar for Wednesday include a raft of UK data highlighted by trade, GDP, industrial production, and construction output, Eurozone industrial production, an ECB Lane speech, US producer prices, and Fed Chair Powell testimony. That's all for now.